Hello, everybody. This is Steven with Cannin.com, back for another technical analysis this week. We're fielding a lot of questions on the same companies, but those that have listings in different countries. Let's jump over to the pricing chart and I'll show you what I mean here. So, a couple of weeks ago, about February 9th, we did a video on nutritional high. So, check out our YouTube for that. And what we said is that there was a little bit of strength coming into the next week. And you can see that we nailed that one. It was perfect. The first two trading opportunity, we had a 75% increase and a 28% increase. So the technicals don't lie, and definitely pay attention to what we're looking at. But we were going to look at the MACD, Chaikin, and OBV, and what we see is fairly typical of both tickers. So here we're seeing EAT. This is actually traded in Canada up on the CSE, the Canadian Stock Exchange. And you can see the OBV kind of takes off the 28th, 29th of January. The Chaikin does the opposite thing, 29th, February 1st. I happen to have SPLIF, which is the OTC ticker, open here as well. And you can see the same kind of movements that we saw in late January. And then a little bit different analyses here because the volume is different, obviously. But on the SPLIF main ticker here, we also have showing overlaid SPLIF and EAT, so both tickers. So EAT, the one traded up in Canada, is our Hakanashi. And SPLIF is this orange line here, and you can see they mimic each other almost exactly, and that's exactly what you would expect, right? Otherwise, we run into arbitrage opportunities, and these are opportunities that you do want to be cognizant of. They are rare, but when they exist, you definitely want to act on them. And what I mean by arbitrage opportunity is if one of these, let's say the EAT was really low and the SPLIF was really high, we would have an opportunity to buy on one market and sell on the other to take a profit. And all we would have done is bought the same stock and sold the same stock of the same company, but we would have made an opportunity there, and that's called arbitrage. Now, you want to be careful with these, right? Because there's also other risks associated, and one obvious one is currency risk, right? Because you're going to be buying and selling in different currencies in this example, unless your trading software or your brokerage account allows you to trade in the same currency in two different markets. So definitely these are the intricacies of arbitrage opportunities. They do exist and people do make money off of them, but they're rare. And especially in the cannabis and hemp industry, these companies have wild volatility, so it adds another risk to trying to profit via arbitrage opportunities. You can see how tight SPLIF on the OTC and EAT up on the CSE are. There's almost no arbitrage opportunities here. Our technical indicators are telling us the same thing at the same time as we saw before. The magnitude is a little different, right, due to the volume, but the trends are the same. I mean, these lines you can see above the signal line, positive, 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 positive above the signal line. So it's not incredibly helpful for us to do one video on one ticker and then do another technical analysis on the same company traded on a different stock exchange because, as you can see, the analysis is the same. So be aware of these arbitrage opportunities. A lot of the companies that we look at are traded on multiple markets. Almost all of them are in this same scenario, something in Canada and something on the OTC ticker here in the United States. But all international companies are going to have multiple tickers and they're going to have multiple arbitrage opportunities. So definitely something to watch for. Nothing jumping out to us here with nutritional high, but I hope that was helpful for everybody asking. Thank you so much. Happy trading.